Stavros Tousios for M4Markets. In today's video, we're going to have a quick look at the British pound against the dollar and also at the dollar against the Canadian dollar, the Loonie. Now, starting off with the GBPUSD first, we do have repetitive signals that suggest momentum is drying out and there's going to be a pullback, if not a reversal, following this sort of price action, right? At the same time, this certain price action also kind of looks like a wedge pattern, and wedge patterns usually do, offer opportunities for reversals. There is a lot of levels taken into account. 120 is important, 119 is important, and the case here, however, is that we're still bullish as long as we are above 123.40. On the 1 hour time frame, we also see the kind of same signals popping up. We had a double top here, okay, and momentum has been slowing over here on the RSI. We've also had a signal from there to there, whereas on the RSI, it's from there to there. It's kind of flat. So the best thing to do is to draw a channel here. Or if you want, equally, can make this like, give it a diagonal shape, right? Because it does look like a wedge. Now, as long as we are between these two trend lines, it's likely to consolidate, but the fact that we do consolidate and we are doing that in a tighter range is going to give us a breakout one way or another. It could be a false breakdown and then we'll move up, or it could be a false break up and then we'll move down. Now, the downside is a bit more likely at this particular stage because usually wedges have 3 peaks and 2 troughs. Okay, so you've got the 2 troughs ready and you've got 3 peaks if we consider this as a completed sort of price action. But maybe there's going to be one more leg to the upside perhaps, and from there the likelihood of going lower is going to increase. Now, we have to pay attention to 123.24 and then the previous swing high, I would say first at 121.50. These are the levels to keep an eye on. But usually wedges do, if they pull back instead of reverse, they go back to the first trough, and the first trough in this case is down at around 119. Now, when we look at Loonie, it looks like it's correcting, okay, if you look at this. But here's what is interesting, okay, if we look at the structure from all the way down here, usually, because I see a head and shoulders pattern here, right? Let me just show you. You got the left shoulder, the head, the right shoulder, yeah, and then we fell. Now, as long as we are below the right shoulder, which is at 138, which is still far, that could be sliding lower to around the 161.8, because usually head and shoulders do that. They go down to the golden pocket, as we know. Okay, that's around 130.70. But at the same time, we cannot ignore the fact that we are trading still within this channel and we have been moving up. Look at this. This is a bit more evident over here, from there to there and from there to there. Okay, you've got that signal going up and there is no evident slowdown in the RSI. I mean, no evident signal, right? So, although all of this looks like corrective, as long as we are inside this channel, there is more potential for upside rather than downside. Only if we break below that sort of level around here, around 135.20 or so, then we start to worry about moving lower down, with first, of course, the 133.80, which is the swing low, being as a first potential support level here, okay, where we could see a bounce and further continuation, or maybe we're going to see a rejection up to this channel and then fall, or maybe we're going to come back within that, okay. But for now, it looks like to me that this might give us an opportunity for a little bit more of a respite up here, okay. And 136 to 12 is one of the levels we have to pay attention to, of course, and then the previous high.